What House Republicans have voted for is one massive gift to the Chinese government. Because guess what? Our competitors are not debating whether to pay their debts or wreck their economy. They are not debating whether to invest in their future or cut and cap the investments that keep them competitive. They are doing everything they can to get ahead. So I'm asking my Republican colleagues here at the brink of economic calamity, do not let Speaker McCarthy's partisan hostage-taking win the day and lose the 21st century. Do not force an unprecedented economic crisis on our country in a vain attempt to slash funding for families and veterans and communities across America. Come to the table, work with us to simply pay our country's bills like we have so many times before, including 3 times under the last president. And then let us work together on our bipartisan spending bills that invest in America and keep us moving forward, which is, I will tell my committee members, exactly what we are focused on doing in the Senate Appropriations Committee. So with that, Mr. Zandi, or Dr. Zandi, let me ask you, can you speak to the potential macroeconomic damage of House Republicans' Default on America Act, both to our economy and our nation's competitive edge on the world stage over the next decade?
Thank you for the question, Senator. I think there's two broad macroeconomic issues. One I mentioned in my oral remarks, and that is the cuts are going to occur later this year under the legislation that's been passed by the House later this year in 2024, when the economy is going to be very, very fragile, at risk of going in recession, grappling with the higher interest rates, the banking crisis, and now the drama related to the debt limits starting to do damage in the financial markets, and I suspect will do significantly more damage before lawmakers act and increase the limit. So the risks here are quite significant in the near term. The second macroeconomic impact that I think is worth considering is if you do the arithmetic, the cuts to non-discretionary discretionary non-defense spending will take the spending from 3.5% of GDP currently down to 2%. And 3.5%, by the way, is less than its average over the past 50, 60 years. So this isn't really, this is a place where spending has remained very restrained and not grown more quickly than the economy has been equal to the economy.
Dear friends, this is important news from the Internal Revenue Service. Tax officials say that many Americans are still waiting to receive their tax refund check. This payment averages approximately $3,000 for most taxpayers. But in some cases, you will need to take further action to receive your refund check. My dear friends, please do me a big favor and watch until the end of this video. Also, to say thank you for being part of this community. Every Friday, I will be announcing several winners for the $75 Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, all you have to do is click and like several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. The Internal Revenue Service has reported the average refund amount in 2023 was $2,753. This was a 9% drop from what the average refund amount was last year, which clocked in at $3,012. The IRS warned back in November 2022 that refunds may be smaller in 2023 for various reasons, including the lack of economic impact payments and the greater difficulty around deducting charitable contributions. But what about if you never received your check? So according to Yahoo News, millions of Americans are still waiting for their tax refund from the previous year. Over 90% of tax refunds are typically issued within 21 days of filing. However, if your government-issued check or direct deposit remains outstanding nearly 1 year after the filing deadline. Experts say that it's time to take proactive steps to track down your missing money. Discovering the status of your refund can begin as early as 4 days after electronically filing your tax return. You can use the IRS's Where's My Refund online tool to find more information. For those who filed by paper, you can expect a wait of at least 4 weeks, potentially extending to 6 months or more due to processing delays. The Internal Revenue Service updates its digital tracker daily, indicating your refund status as return received, refund approved, or refund sent. Direct deposit recipients should see the deposit date upon approval, while mailed checks may take a couple of weeks to update. So if your paper return, which was submitted over 6 months ago, does not appear in the Where's My Refund tool, you may want to consider resubmitting electronically. However, you should also check your mail for IRS letters, as communication occurs via mail. Paper returns mailed to the Internal Revenue Service currently take at least 6 months to process. If you filed an extension and sent your return by the extended deadline, paper backlog may explain the delay. Certain tax breaks, like the Earned Income Tax Credit or Additional Child Tax Credit, face heightened security, delaying refunds until mid-February at the earliest. Errors, especially related to the Recovery Rebate Credit and Advanced Child Tax Credit, contribute to these delays. Lastly, you may consider the possibility that the Internal Revenue Service never received your filing. This is more common for paper filers, and your return may have encountered delays in the postal system or confusion with your tax preparer. Mortgage rates dropped for the 3rd week in a row, providing some wiggle room for budget-conscious homebuyers. More softening may be on the way, with some experts predicting that rates may have already peaked this year. The average rate on the 30-year fixed mortgage fell to 7.44% from 7.5% the previous week, but still, rates have held steadily above 7% for 3 months. It is a stretch not seen in 22 years. The move-in rates came after a government report this week, showing inflation came in lower than expected in October. While Federal Reserve Chair Jerome Powell did not rule out the possibility of another rate hike in December, the Fed's commitment to remain data-dependent gave traders and housing experts some hope. Elevated rates have been a blow for home buyers' affordability in recent weeks, keeping homeowners from listing and home prices out of reach for many Americans. Rates moved lower last week after a weaker than expected monthly jobs report solidified the Fed's decision to hold its benchmark interest rate between 5.25% and 5.5%. But rates are just part of the equation, as many buyers are on the hunt for a home, also have to deal with scarce inventory levels that are keeping home prices high. According to Realtor.com, elevated rates have pushed home buyers nationwide to offer larger down payments to reduce the size of their mortgage loans. Currently, the average down payment is 14.7% of the sales price in the 3rd quarter. The median down payment amount equaled $30,000. So, dear friends, what are your thoughts on the current housing market? Please let me know what your thoughts are in the comments section below. Well, my greatest and most awesome friends, that is the end of my daily stimulus update video for today. Tomorrow, friends, I will be announcing several winners for the Walmart gift card giveaway. Please make sure you enter these giveaways by clicking and liking several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. Thank you, and have a wonderful and very blessed day.